All right, let's talk about the mystery charts and the methodology in action. These are two straight from a trading service. This is TFPM. This is a gold company. As you can see, the big blue arrow is pointing higher, and notice below that's lots and lots and lots of Landry light. That's the lows greater than the moving average. That's the count on that. And you can see that it did begin to accelerate higher, and that's one thing that I like to look for in charts. Persistency, acceleration are probably the two biggest thing. Ability for the stock to trade cleanly, which is also a form of persistency. This is really clean for a gold stock. I'm a little bit more lenient with precious metals and rare earths and on things of that nature, because they can be a little choppy. Anything commodity related can be choppy, but this is a really clean chart. Nice little pullback to the moving average. Notice the Landry light goes from 15 or whatever that is down to 0. Once it intersects moving average, it goes to 0. Like right here, you can see it was up about 20 something, and then back to 0. Again, it just counts the number of bars above or below, as you can see if you squint your eyes back here for downtrends. The moving average, pick your favorite. The 30 EMA is my favorite, and spoiler alert, I'm going to talk a little bit more about the 30 in just 1 minute. There's the parameters down below. Entry of 2150, initial profit target IPT of 2425. Total risk is 275. If you need a blank copy of the spreadsheet, I can give it to you, which it's based on 100K hypothetical account. I do have a model account, so to speak, where I do take these trades, and I'll show you the actual trades. Maybe not this week on this one, but I'll show you an actual trade on another trade I took in the model. Anyway, entry was there, stop was down here, initial profit target was up here. So let's see what happens. It triggers, and then it kind of implodes on itself. And that's one thing I talked about last week, and that's about a $3,000 swing if memory serves. And it can be a little frustrating because you're in a position and all of a sudden it starts going against you. You're like, well, maybe I should just get out. And the old me might have bailed out more quickly. The new me, especially with these things that I recommend publicly, it really forces me to hold myself accountable. And that's one thing that I was thinking about earlier. We're going to talk about an opening gap reversal trade that I mentioned earlier this week, actually yesterday, I think. And the whole time I'm trading it, I'm like, well, you know, I did mention this to my peeps, so I better do a good job with the trade. Doesn't mean I have to make money on it. It just means that I need to do a good job following the process. Landry, a while back, I was watching one of her tweets, and she talked about someone, and I forget the gentleman's name, but he was someone who had some trading systems, and he wasn't like, did we make money? Did we lose money today? He was more of the mindset like, how do we do today? Like, how do we do today following the process, good, bad, or indifferent? So if you make money and you didn't follow the process, did you really do the right thing? And that could encourage you to do the wrong thing in the future. But anyway, so you can see nice little move higher. We banged out the IPT on this one, and we're nicely higher today. Hopefully we'll hit some brand new highs. So there's the actual trades that I took. So yeah, I did have some actual trades in here. Anyway, I took a $900 profit in the first loaf. Ideally, you want to try to get to right about the $1,000 because we're looking for a 2% gain overall. 100K account, 2%, $2,000 overall. You take off half, so you put $1,000 in your pocket. Put a little bit less in my pocket. This time I use a little discretion, I think, on the IPT. But the real money is in the second loaf, and I hate to use the word hope, but hopefully this stock will continue higher, and then we'll trail that stop higher and be with it for a long, long time. Speaking of trailing stop, now we will trail the stop as the stock moves in our favor, even if the IPT isn't hit. But if the IPT is hit intraday, we bump that stop up again. As I say again, because I say this every week, but we bump that up to break even, and that way we have a free roll, so to speak, on the remainder of the position. Here's another one, another gold stock. This was not a mystery chart. I think I mentioned this one after it triggered, or it set up after a week in chart, so I wasn't able to show it live as a mystery. Anyway, nice big blue arrow once again. Not quite as clean as the other stock, but it looked pretty good. And one thing I liked about it was, one, it accelerated higher. And then, although this looks slightly bearish, making that minor double top, that's a pattern I call a double top knockout. And it's a pretty cool pattern because what happens is the market makes that double top, and ideally you want the second little minor top to be much higher than the previous one, and that sucks in more players, okay? And then when the market sells off fairly hard, it shakes them out and possibly attracts some eager shorts. And the predicament all these traders can actually help your trade along. Remember, my version of technical analysis is a simplified way of looking at things, and I'm just looking at what happened in the past in the charts and what was the behavior of the players and what will likely be their future behavior. So if I see a stock make a minor double top and then begin to implode a little bit, pull back, provided it's in a really good longer term trend, then I know that some shorts have been sucked in, some players have been knocked out, a la the double top knockout pattern. And I know that the predicament of these traders could potentially propel my position higher once I get a trigger, obviously. But anyway, you can see, once again, Landry Light pullback 2 on this one. That's one thing that amazes me. I know I say this every week, but there was, I forget how many months ago, it was during a good period of time where we had a lot of winners. And I went in and looked at all the winners, and to my surprise, every single one of them was a Landry Light pullback. And as I often preach, borrowing a line from the Nebraska, all you need is one pattern to be successful. And I think if I had to pick one pattern, that would probably be the pattern, provided, of course, you combine it with a little persistency, a little bigger picture analysis, make sure you don't have overhead supply, etc. Make sure the stock trades cleanly, and ideally acceleration, etc. But anyway, so it pulls back to the moving average, and Landry Light goes to 0. It actually goes negative a little bit, but that's okay, because longer term it still looks pretty good with the 30 EMA. There's your parameters: 1450, protective stop 1250, IPT 1650, 2 points of risk. If you know your entry and your protective stop, then your initial profit target is just simply the entry minus the stop plus the entry. So in this case, we 2 points plus the entry, 1650, and that's calculated for you in the spreadsheet. So let's see how it shook out. Entry's here, stop is here, initial profit target is there. So it's doing okay. I'd like to see it bang out that profit target and beyond. It's having a pretty good day today. So it's up closer to 16 or so, 15 and change at least. So that's a good thing. Now, as I said a second ago, you don't wait until the IPT is hit before you move that stop up, although I did have a client in the past that has experimented with that. Clients have experimented with a lot of different things, and that's fine. I've just come up with a way that I like to trade, and I like to explain things, and I like to follow things in a certain kind of way. And a lot of clients, well, what if we did this? What if we did that? Well, that's fine. Whatever you want to do, I'm just giving you the basis of what I do, and I'm also working to be very consistent in what I do. So if you wanted to follow along, you could follow along. And I've tried everything in the world. This is what I've settled upon, and this is what I'm sticking with for now. And like I said before, 100 times, maybe 1,000. Somebody was doing a due diligence on me, and they found a post from 20 years ago, literally 20 years ago, where I was talking about bow ties. And they're like, well, this guy's talking about bow ties today. And that's good to see. And he compared to contrast me to, and I'm not going to throw the guy under the bus. I like to, but I'm not. You know, I don't want to get in trouble here. But anyway, he tends to put out a system du jour, and these systems are very expensive. And every month he has a new system. And if you buy this new system, it'll be the only system you ever need. And it just begs the question, what happened to the system you were selling last month? So I'm pretty much showing the same stuff that I showed many, many, many years ago. All right, let's talk a little bit about trading OGRes. So this is AMSC, and I put this post out yesterday right before the open. AMSC potential OGRe. This is in my Facebook group. The group is free, but you have to be a member of DaveLandry.com. That keeps the riffraff out. Half kidding. Anyway, so at least I know one guy took it. Charles took it. He said, "Thank you. I took this one with 1 point for the IPT. That's exactly what I used." And he just hit the IPT 30.15. In one account, I did enter a little higher, and that's right around where I got out and took half. And I'll walk you through the trade that I took in the model account. Yeah, here's my trades right here, 29 to 29, 25 with a 1 point IP2. Anyway, so you can see this stock was in a very persistent longer term uptrend, and those are the best. You can find a really nice persistent stock, and you want it to be banging out at least multi-year highs or significant highs, I should say, at the least. And then you're looking for that gap, and the idea is that the gap knocks out a lot of people, maybe even sucks in some eager shorts, and if the stock begins to reverse, once again, the predicament of those players can propel your trade higher. So on the open, and you have to be really careful. This is where it's really tricky. This is where there's no mechanical rules that you apply or anything like that. You just have to watch it open and see what happens. Now I'm showing you on a 5-minute chart. Over the years, I've graduated to higher and higher time frames for the intraday stuff. And I've also tried to do less and less of the intraday stuff. That's why I've moved the shows back to the day, because I was trying to just make much money as quickly as fast as possible, doing a lot of intraday stuff. And was really kind of out of my wheelhouse. I have a client, when he's hot, he can scalp, okay? I'm not a scalper, because I'm trying to hang on and take partial profits and ride the trend all day. So I know what I need to do. I know what my forte is, but something like an opening gap reversal to me makes a tremendous amount of sense. And even though I kind of preach against day trading, it's one day trade that I will occasionally take when everything sort of aligns like it did with this one. But anyway, so on the open, you got to be careful not to get too caught up in things, because you see it did sort of bump up a little bit, and it would have been really easy to get sucked in. As I've said before, one thing that you might do, let's just back this up. One thing you might do to avoid getting too caught up in the intraday or the opening gap noise, okay, is to keep an eye on that daily chart and maybe think about where you would enter on the daily chart as opposed to focusing too much on the micro. So you know, look at that intraday chart, but also look at the daily chart. And also, one thing I'm just kind of thinking out loud, you know, maybe when it comes to ogres, maybe if you're newer to trading ogres, maybe the thing you do is only trade the ogres that show some sort of fake out first. That way you're going to avoid getting maybe sucked in on that opening gap noise, okay? So I'm just kind of thinking out loud here, and maybe this is something that we could flesh out further. Because again, this one you can see it open here, but it did have that pop up, and I remember watching it start to rally. I'm like, oh shoot, I better get in, I better get in, I better get in. It's like, hang on a second, Dave, don't get too emotional here. Let's just let it shake out a little bit. It's only going up a little. Let's see what happens. And unfortunately, as you can see, it begins to implode, and that's when it's almost like a big sigh of relief. And again, maybe if you're new to trading the ogres, you only take the ones that fake out first. It sort of reminds me of Kevin Haggerty, God rest his soul. He was a great guy. I tried going drinking with him once, Guinness 1 for 1, and next day he woke up fine, and I woke up not so fine. He was an Irishman, a super nice guy. But anyway, long story endless, in his office, when they got a new guy in, they would only let the new guy take the second signal. The early bird gets the worm, the second mouse gets the cheese. So that's kind of like a second cheese type of situation. So if some guy comes in, because you would end up with a lot of fake outs early on. Now, once you become a little bit more experienced, then you're willing to take those fake out, stop out, you know, whatever the case may be, and then go for that second cheese type of signal or second mouse type of signal. But anyway, this is kind of reminiscent of that. So if this thing would have triggered, just going and blowing on the open, then maybe you would pass on that if you're new to ogres. I don't know. I'm just kind of thinking out loud, and you know, maybe somebody wants to flesh that out a little bit, and that might be a better way to trade these things. And I know that some cases it's going to open and go straight up, so you would have to be willing to miss those. But if you missed a lot of these fake out type of moves by maybe giving it 5 minutes to see if it implodes like this one did, you might miss a lot of losing trades. And if you think about it, if you miss a lot of losing trades and catch more winners, psychologically, that you're going to be so much more better off. Now, there is a FOMO, and believe me, FOMO is painful, and I actually call it POMO. The pain of missing out is when you watch something go up without you. This is especially true if it's something that you saw as a setup and you intended to take, it didn't take. FCEL, boy, I tell you what, and I admit a lot of mistakes to you guys, and that was one that was in my Landry list, and it was a little too volatile or whatever the case may be. It wasn't quite perfect, but I did like it, but it was too, again, volatile, whatever, for me to recommend it as an official setup. But I did put it in as an honorable mention, and I put the parameters in there, and I said, Dave, I think I'm going to take that. It's too risky to just put out as a blanket recommendation, but I think I'm a big boy. I think I can handle it. I think I'm going to take it, and I did not take it. And on Facebook, I noticed somebody's like, hey, Dave, thanks for the F cell. I'm like, oh, geez, I forgot to take it. So it happens. And that's another one of those million little things. And I know I'm digressing a lot here, but that's how I do. Anyway, you can see long story of this, again, it gapped down, a little fake out, and then came back in. So I'm like, okay, so now that I have the fake out of the way, I can put in an entry above the market plus a little wiggle room and hopefully avoid getting triggered on noise alone. You can see it'll trigger here. And I thought one point like Christopher was a good round number that would work in this particular case. So broadcast that up from the entry. My initial profit target is 1 point higher. Now, it did come in initially, as you can see here. And I was watching a 30-minute chart, and it's a little bit easier to watch on a 30-minute chart. It's much harder to watch on like a 5-minute chart. So as I said earlier, I went from 5-minute charts, and now I've made it all the way up to 30. And it was a mistake I made a couple of years ago. I was watching E-minis on a 5-minute chart, and somehow I accidentally changed it to a 15-minute chart. And the next week I come in to trade, and there's no trades on Monday, no trades on Tuesday. I'm like, what the hell's going on? And then on Wednesday, I had a setup, and I took it. My ADD kicked in. I thought it was a hawk, but it's a squirrel. Squirrel. Anyway, so I'm like, what the heck? I'm not getting any signals. And then I took the trade, and it made money. And then no trades the next day. And I think on Friday I had one more trade, and it made money. And I'm like, well, this is weird. I'm not getting a lot of signals, but I tend to be more profitable in the signals. And then I realized that, oh, shoot, I accidentally changed my time frame, but it was a learning experience for me. It's like, well, maybe that's what I need to do. Anyway, it hit the IPT. It took a little while to get there, but it did hit the IPT by noon. Now, this is an automated trailing stop that I had in place, okay? So I think the round numbers, the entry was 29. I might have got in at 29.02 with slippage on this particular trade. So that's 1 point higher would be 30. And there's only 200 shares, just kind of like just modeling it out for you here. And that's why I did just 200 shares in this small account. And you will, this stop will automatically trail higher. So this started trailing higher right here. This actually began to come up a little bit. And it keeps coming up, and when you hit the initial profit target, which is 1 point higher, then your stop is 1 point below, and that's the beauty of these automated trailing stops. Now, at this point in time, there is absolutely nothing to do. Now, I almost bailed out on it, but I said, you know what, Dave? I'm going to hold it to the close because that's what my plan was, to have that automated trailing stop, keep me in, have the initial profit target, take me out. I actually do put a limit order in these cases. And in a case like this, I'm just thinking out loud here, this became a 100% hands-off type of trade. Now, one thing I was thinking about is yesterday I was extremely busy. I was working on a Substack article. I was working on these slides. I was watching the markets a little bit, of course. But by being busy, and as I often preach, busy traders make good traders. By being busy, I was letting this thing unfold. Also, by holding myself accountable, because I put the trade out there and said, okay, well, I took the trade. Here we go. Let's see what happens. I didn't want to micromanage it, and I wanted to be as hands-off as possible. So this is, as I'm just kind of seeing it now and thinking about it, this is probably as pretty as it gets. Now, I would have liked to make a lot more money on the trade, but it was profitable overall, and it was completely hands-off. I placed one order, and I got triggered, and then I placed 2 orders. Okay, 100 for the IPT, 100 for the trailing stop. So anyway, trailing the initial profit target gets hit. My stop automatically is now at break even, and then all I have to do, I know easier said than done, is just sit tight, wait for the end of the day, and if I'm not stopped out, exit near the close, and that's what I did. So you can see down below there's a trades 2902, 3002 IPT, and then exit around the close. Unfortunately, we had a nice rally late in the day, but then it came back in, and I just wanted to follow the plan throughout. And it's like, well, I was a little tempted later in the day, like, oh, geez, it's 10 minutes before the close, and this thing's looking pretty good. Might want to bail out. It's like, nope, let's just see if it keeps on going. And sometimes these things can get squeezed at the end of the day and go 3, 4, or 5 points. Not all the time, but every now and then. Or not often, I should say, but it does happen. Anyway, so $100 plus $67, $167, better than a poke in the eye on this trade. And obviously, I did take it across multiple accounts. So if you have a bigger account, you can put on more shares. If you're newer to trading, then trade fewer and fewer shares until you get the reps in. Okay, if you can make money with a small amount, trading small size, and be consistent, then all you have to do, I know easier said than done, but all you have to do is slowly increase your size over time. All right, any questions or thoughts on that? I'm going to blow through this TFM system pretty quick. I have a complete playlist. If you look at the methodology and action playlist on YouTube, youtube.com/Dave Landry. I'm trying to remember my channels right here. And then if you look at the playlist, there's one called Methodology and Action. And you can go in and see the first part of the weekend charts that I do. It's pretty much the weekend charts, actual charts for the week, okay? And you can learn a lot more about this system. But the rules are basically you're going to exit when you close 10% or more away from the 50-week closing high, and you're also below the 50-week simple moving average. So this is a weekly chart, and we just had another buy recently, and I talked about this last week, a week before. I'm not a big fan on buying on weakness, although I didn't realize this when I developed the system. A parameter that I probably should have added in, or another rule, was that it has to also close above the open for the week, or maybe even close higher for the week at the second bar. Anyway, so I didn't like that signal because it was, you were buying on weakness as opposed to buying on strength, and I prefer buying on strength. I don't mind paying up for price. I'm not looking for a bargain. But so far it has worked, and it did turn back up after that. So again, you'd be buying on the weakness as opposed to strength. And I guess another way of looking at it would be, it's like, okay, I'm not going to buy on that, but when we close above the highest close of the setup bar, that might be a good place to enter, which would have been right there around 6,000. All right, I know I just blew through that, but believe me, there's lots of videos on that. There's also lots and lots of videos on Landry 100. I'm getting a lot of questions on it, which is exciting for me, and maybe I'm going to flesh this out into something more and more. And now that I know that people are paying attention to it, I'm finding myself working harder and harder on this list. But the bottom line is, so far, this is just a proof of concept, okay? And what I'm trying to achieve here is to show me the money flows, to show things like momentum begets momentum. You can't just buy all new highs, right? But if you buy enough new highs, you're going to catch some really big trends. And we had one I showed last week or a week before that made it as high as 1,000% move. It was the first 1,000% winner since I restarted this Landry 100. Momentum also ends badly. That's something that people don't talk about a lot. Is in the end, you give up some of that trend, and it could get whacked. The other thing that came out of this, and I don't really have fantastic tracking. I have live tracking on an individual stock basis, but years ago I had live tracking on the whole portfolio, which was really cool. And one of the things that came out of that is I learned that the lists would get hit, momentum, these go-go stocks, these high alpha stocks, if you want to call them that, and momentum stocks would get hit really hard, even though sometimes like the S&P 500 would be making marginal new highs or even all-time highs. And then 2 or 3 days later, the S&P 500 would just get absolutely creamed. So my list would get hit like 3 and 4 and maybe even 5%. It was like, oh, good Lord, this thing got creamed today. It's like, but the market's doing okay. Is it that odd? Well, that's just one of these little nuances that came from it. So it's, I'm not going to say it's a lot of work. It's a little bit of work, but the payoff I'm beginning to see is pretty good. Now, ask me again in the middle of summer if everything gets all choppy and ugly, whether or not it's worth doing this. But for now, it seems to be a really good experience. So you're going to buy new highs, okay? That's the only rule. When I did this before, so far, I've been doing this about a year now with this new rebirth of this, if you want to call it that, or reboot, I should say, rebirth. That sounds kind of weird. Reboot. But so far, I've been able to buy all 52-week new highs. Now, over time, especially if the market's choppy or if we go into a little bit of a bear market again, then I'll probably have to drop that down. I seem to remember buying like 90-day highs at some point in time, but right now there's enough all-time highs to buy this, or at least 52-week highs. Now, I'm selling weakness, okay? So if stocks get creamed in the list, I start taking them out. And then the other thing that I will do sometimes is if there's a lot of stocks I like that are making those new highs, I will displace, so to speak, some of the underperformers in the Landry 100. Or by underperforming, they might actually be positive, like a 2 or 3 or 5% gain, whatever the case may be. But I'll replace them because there's something that's much hotter that comes along. And one way of looking at this, it's like I'm doing a continuous window dressing, okay? So window dressing is you put your stuff up front. It's like you're trying to draw people into your shop, so you put something exciting up front. And window dressing, as it applies to a portfolio, is let's say you're running a mutual fund and you're getting ready to report all your positions and everything, and you don't have, what's the stock that's at or near new highs? So Netflix is usually a good one. Netflix is at new highs now. If you don't have Netflix in your portfolio, then maybe you need to put Netflix in your portfolio, or to a lesser extent, maybe some momentum stocks like these small scale nuclear power stocks or hot stocks or AI or whatever the case may be. If they're making new highs and they're hot, you better put those in your portfolio. But this is like a constant window dressing. I'm constantly trying to make the portfolio look as good as possible. Now, I did get asked some questions this week on money management. There's no money management, again, and I know I'm repeating a lot of things here, but if you go in and watch, again, the playlists on my YouTube channel, you can get a lot of this information out. Now, I did experiment with it, and one thing I did kind of think about, because I had one, it was JYD, and I actually did take that trade personally when I was working on this experiment, is it hit 100% and I took off half, and then it imploded and lost like 90% afterwards. So I think if you were doing this with real money, you would definitely have to tweak your money management a little bit. I'm not saying that you should use like a tight stop or anything, because a lot of these stocks are going to move around a lot because the momentum is kind of crazy. And that's another thing that comes out as you watch this momentum unfold. But I do think that if you were using real money, at the least, you probably want to sell a half at 100%. Anyway, so that's just the bottom line there. And one thing I've been showing quite a bit, even during this downturn we had not too long ago, speculation was still pretty much alive and well. The list did drop down to about 80 or so, but there were still quite a few that, if you look through this list at the open dates, you can see were started long before the market had its slide. There's a couple in here you can see that go back to January. Here's one that's back to April. So some of these big winners in here have been on for quite a long time, and they were able to ride out, or we were able to ride out, having a look at it, the the big slide. But anyway, this one was up 1,000 a couple of weeks ago. It's since pulled back a little bit. I haven't taken it out because even though it's a very deep pullback, it still looks pretty good longer term. And when I took the snapshot, it was up 713%. So I zoomed in on some of the top ones. You can see these are pretty big gains. And again, this one right here, NAC, that's a silver stock. That goes back to December of 24. I don't know what the oldest, the oldest one is. We'll take a look at that in just 1 second, the live charts. This is, I'm kind of in the early phases of starting to do this again. I found some old presentations from like 20 years ago, whenever I first did this Landry 100. And I saw these cool charts and all. I've completely forgotten how to do them. And I realize that's hard to read, but I can upload this to a YouTube post, Twitter, or X. And also, I think I put it on Substack already this morning. So if you're looking for that, you can find it. DaveLandry.substack. Anyway, I'm not going to spend too much time on this. Like I said before, momentum ends badly. Relative strength in a bear market is okay, but eventually they find you. So if you do go in and look at some of these older presentations, when we were in a bit of a bear market recently, there were grocery stores in the Landry 100. Well, that's kind of a defensive type of area because people still need to eat. But remember, eventually, and they eventually came out, because when a market begins to slide, they eventually find all stocks. So there's always a bull market somewhere. It's not necessarily true. That's one of the myths about Wall Street. But yeah, it's a great way to find where the money's flowing, as you can see in that pie chart. Let's just go back to that just for a second. So just real quick, you can see gold is the biggest slot here, and then it's industrial metals and mining, uranium, platinum, silver. That's all in that. So I think uranium could offer some opportunities really soon. Platinum is going straight up, so maybe some platinum stocks might be worth a shot. And there's only one in here, but it's kind of interesting. There could be more really soon. The small scale nuclear production. Okay, that's we were in a hot one a while back. NNR, I think, that just went up like crazy. Unfortunately, momentum ends badly and came back in and knocked us out. But we did make a lot of money, at least initially, on that one of the bigger winners. But it looks like that's coming back. But anyway, you can see again the big slice in gold, big slice in industrial metals and mining, and then software, pretty big slice. If you software overall, about 13%. And then insurance, believe it or not, there's a few insurance stocks in here, some medical care, and some very small slices in energies and different other little miscellaneous sectors. But it does help to see where possible new money could be flowing. There's one coal stock in here, so it's a great, again, exercise, if I say so myself. Cash is treated as an asset class. So like a while back, I think I was down to about 77 out of 100. And so those 23 slots were holding cash, okay? And this Landry 100 could end up being like 20 stocks or whatever if we got into a longer term bear market.